Oh, Sheila.
Hello, Paul.
Hey, thanks for taking time out of your afternoon having coffee with me and your agents.
My pleasure.
Your agents and I.
My pleasure. Your pleasure.
Hey, we got an email this week from an agent, and he said that his client received a letter from their insurance company stating that they are going to cancel his hazard insurance. And his premiums are up to date because it's escrowed. Can they really do this?
Do you know if the homeowner is occupying the property? Is it vacant?
No, it's not occupied. It's vacant.
Is it vacant? That's the reason. Because the insurance company, it was insuring that property because it was occupied. There were tenants or homeowners in that property, which reduces their exposure to vandalism or damage to the property because, you know, if let's say a pipe were to burst, someone would be there, they would see that they had a problem, they could turn off the water and take care of it. If it's not occupied, if it's vacant, if that pipe were to burst, it could be days before somebody came in there. So insurance companies will cancel insurance if they find out that a property is vacant. If it's not being, to them, again, it's like an abandoned property, whether it's not abandoned or not. If someone's not occupying it, to them it's abandoned, and the risk for damage to that property or vandalism is much higher. So they're going to cancel the insurance.
So they're assuming it's a high risk situation, and
now you're going to pay a higher risk premium.
Yeah,
and a lot
the
of
policy
insurance
doesn't allow for 1 week worth of water pouring in the basement.
You got it. So they're gonna cancel the insurance, or you're gonna have to find an insurance company that will insure that property as a vacant property, which is gonna skyrocket your premium.
Interesting. Okay.
When that happens, you're either going to need to find insurance, you're going to need to get a caretaker into that property and notify your insurance company that it is not vacant, or what's going to happen is the insurance is going to be canceled and your lender is going to force place insurance. When they force place insurance, there's nothing as far as personal property that is insured. It's just the structure of that building to protect the lender. With regards to their asset, because that asset is theirs until you've paid it off in full. So they got to make sure that their investment is protected. The problem with that premium is going to be about 3 times the amount it would be on a regular hazard insurance policy.
So what you're saying is that we could load our computers up in these nice properties like in Eagle County and operate our business in
yes, we could be a caretaker.
Exactly, with satellite
and
operation.
Occupy your property that's vacant.
Yeah. We want it really close to great dining and mountain views.
Area.
Yeah.
During the winter times.
Problem solved.
We're good.
Check.
We're good to locate. We'll relocate next to Vale or Beaver Creek.
Yeah.
That would be good for us.
Temporarily,
yeah. Till it's sold, or another tenant is put in there. We could do that. So if that happens, I would say notify your insurance company. Try to make these plans prior to that property going vacant, so you are prepared. Or you can find somebody that would occupy that property for you if you cannot, if you're moving out of state. If you can find someone to go on a month-to-month lease that will take care of the property, or a caretaker that'll take care of the grass or the lawn or the service to make, to give it that, that it's occupied. So the lender will not, or I should say your insurance company does not cancel your insurance, because that's critical. That's going to hurt you. Now, let's say that the short sale is approved. And we go to closing and the lender force placed insurance. What they're going to do is they're going to take care of that premium. Now, I've had homeowners, sellers, as a matter of fact, about 3 or 4, that there was force-placed insurance, and they got a bill after closing. Now, I've contacted the insurance department, and that insurance premium or that amount was covered from the proceeds. So they were satisfied, because it's all internal. It's through the short sale lender, whether it be Wells Fargo, Bank of America. It's their insurance
Sounds
company
like you got lucky.
that they do a blanket. But let's say that the short sale does not go through. You're on the hook. You as the seller or homeowner, you're on the hook for that premium that's 3 times the amount. So they could come after you if that property goes to foreclosure, or if it doesn't short sell and you go back to say, okay, no, I don't want to short sell it anymore. I'm going to bring it current. Well, remember that premium, you're going to have to take care of that.
And once the cat's out of the bag, there's no going back.
No, there's no going back. So you need to be, you need to prepare and know this ahead of time, so you know how you're going to react or respond. You know, get your ducks in a row first before you pull the trigger.
Well, gosh darn it, Sheila, you know, people like you, but that's some great information. Thank you so much for your time.
Hey, you're welcome. You guys have a great week. I'll talk to you next week.